Hi. As we continue our program, we turn to a central challenge in scaling climate solutions in Brazil and across emerging markets: risk. Thank you. Even with strong demand from sustainable investment, too much capital remains on the sidelines. Because, can we have some silence? Thank you. Because investors lack the comfort to commit at scale. By reducing risk, we can unlock unprecedented flows of capital climate to places where they are most needed. This session will explore the tools and strategies paving the way for greater investor confidence and how Brazil can leverage them to accelerate its leadership in climate finance. So I'm honored to introduce our panelist, Alain Beauvillard, Director of the Department of Strategy, Policy and Innovation at the Green Climate Fund. Avinash Persaud, Special Advisor on Climate Change to the President of the Inter-American Development Bank. Luciana Costa, Managing Director of Infrastructure, Energy Transition and Climate Change at BNDES. And Patrícia, Alain, co-founder of Aya Earth Partners. And to guide us in this important conversation, we have our moderator, Luciana Ribeiro, founder of EB Capital.
Very good. Hello, everyone. Thank you for being here. When we organized the event here, the agenda, as you can see, we are giving a special dedication to finance, because we have no doubt that finance is the key point right now. So we have explored finance in climate tech. We have talked about how to scale up investments generally. And now we are going to talk about de-risking. And I'm very glad that we have this amazing group here of people. Most of you guys, my friends, that we have been in this journey here for a long time. And I wanted to take a moment here. Today I'm reflective. We are in the 4th edition of this event, and I have been thinking not just at the snapshot, but the entire movie, you know. And I want to start with Lu here, Luciana Costa from BNDES, because you have been here with us since the beginning. And I think that Brazil has changed very much in the last 3 to 4 years in terms of both regulation and sources of capital. And BNDES has had a fundamental role. We are there living the day-to-day, and we just think at the moment, but if you look into everything that was created throughout the last 3-4 years, it has been a lot. Please give us an overview of everything that has been done and what's to expect next.
Thank you very much. It's an honor for me to be here, Luciana. I would like to thank Brazil Climate Summit team, Jorge, Marina, all the guys that put a huge effort to make this happen. And I'm very glad to know and that, I mean, this event has been growing a lot, because the attention to Brazil has been growing for the past years. Growing because, first, Brazil has combined comparative advantages that no other big economy has. A lot has been said here before, and also in geopolitical terms, Brazil is well positioned, because Latin America and Brazil is a leader in Latin America, and Latin America is very far from wars. And that makes a huge difference nowadays when we decide destiny of investments. The Brazilian government has been working hard to put in place public policies that drive investments into climate. We have an experience from the past with when Brazil scale up ethanol, when Brazil scale up wind and solar, when Brazil build the hydropowers. But what has been done recently? First, Brazil is put in place the taxonomy, the Brazilian Green Sustainable Taxonomy, and the taxonomy is an evolution compared to the Brazil was late to put in place the taxonomy. The country has started to discuss that just in 2023, but we had the benefit to look at other experience to put in place a taxonomy which is not just green, but also sustainable. Brazil has put in place the regulatory framework for green hydrogen. Brazil has put in place the low carbon fuel regulation, has improved the low carbon fuel regulation. We have increased the amount of ethanol in the gasoline to 30%. We have increased the amount of from 15 to 17% in green diesel. In the diesel, the mix has improved, and I mean some regulation that we think that it's given in other countries, it's not, and Brazil has take care of that. Brazil has also, of course, it's not easy, but BNDES has tried also to improve some financing mechanism, and we have been trying to be innovative in pushing project finance more towards a limited and no-recourse debt, and we have BNDES since 2023. In the past, BNDES used to finance projects using a facility agreement which is very illiquid, which is FINEM, and we are moving more towards capital markets. So BNDES is able to co-finance with the market. BNDES has been blamed in the past to do crowding out because BNDES had a lot of subsidies, and the facility agreement that the bank was using was very liquid and preventing capital markets and banks to co-finance with us, which is not the case anymore. Currently, a great portion of our funding doesn't count on subsidy. In infrastructure and energy transition, which is the division that I'm in charge currently, more than 90% of our funding is with market cost. But we have approved mini-PER, which was an instrument that BNDES was not using in the past. Now we are able to subscribe a bond in the long term and disburse according to the CapEx disbursement, which makes the cost of debt, which reduce cost of debt. So what we are trying to do, we are trying to use innovative financial instrument and bring the market with us. Our next step, BNDES will hold the debentures until physical and financial completion, and then we, of course, in agreement with the sponsor, will try to sell in the secondary market. That's our next steps. And one last thing that BNDES is also currently the secretariat of the BIP, the Brazilian Investment Platform. Of course, the ministers, Minister of Finance, Environmental, Industry and Commerce, and Energy, they are the steering committee, but we are the secretariat. And in the scope of the Brazilian Investment Platform, we realize it lacks a lot of equity in Brazil. And what has been said in the previous panel here is that, yes, indeed, BNDES will now be LP. We launched the 5 billion reais, almost $1 billion, a tender to allocate capital for other GPs to manage this money and invest in funds related to climate thesis. And yes, it's the Brazilian government trying to use BNDES balance sheet to increase foreign direct investments in climate in the country. So, and this is an important signal because BNDES will put equity and it will not prevent us to also finance the projects. And one last thing, BNDES has also made a change in the climate fund. So we could, last year it was like more than 10 billion, and this year will be maybe 20 billion for climate fund, because the Brazilian government, the treasury, was able to issue sustainable bond, and the use of proceeds of that sustainable bonds is climate fund. And then we can use this concessional funding in a very selective way, so we are able to catalyze investments to climate. So, trying to make in a nutshell, but it was a lot what we have been doing, and it was a combined effort from Minister of Finance, Minister of Energy, Minister of Transportation and Ports and Airports, the ministers linked to infrastructure, and BNDES. So it's a combined effort to catalyze funding to investments in climate. And one last thing that we are also trying to do, we are trying to mobilize, because World Bank, NDB, China Development Bank, Green Climate Fund, they all like to talk to us and use the governance and the local knowledge of BNDES, so can they deploy their capital through us. And this is something that we are also trying to push. We have started. BNDES raised more than $5 billion with those multilaterals, various multilaterals. A great portion of that is to be invested in infrastructure and climate, but we see a lot of room to increase that.
Lots of work. You have been busy. Avi, we have discussed a lot about the risking mechanisms, and you have been like a central piece in discussing the EcoInvest. When we launched that in Brazil, there is an important component there of FX protection. There is also an important point of blended finance and then reducing the cost of capital for Brazil. Tell us a little bit of your view on what has been done and what are there are lots of expectations of the next wave of products that you guys are going to be launching. So tell us how you see the Brazilian market and everything that IDB has been doing.
I think the first thing to say is that a lot is happening locally, and a lot more will happen locally. But if we want the largest transformation in our lifetime to take place in fairly short space of time, it cannot be funded on the backs of the savings of the poorest countries. It has to have a large international capital flow component. And flows are blocked. There is some $40 trillion of investment by institutional investors every year, $40 trillion. Just 2% is in emerging markets. Now, that's a really interesting number. 2% of all the money is going to where 60% of all the growth is in the world. So you don't need to think about climate or development to know that's really wrong. That 98% of the money is focused on where only 40% of the growth is. That's wrong for the pensioners and insurance companies of the developed countries. So why is that 2%? So we had some discussion in the previous panel, which I thought was fabulous, about some perception issues, and they are perception issues. But there's also a fundamental international financial system issue, which comes back, and I think the lady from Galvanize emphasized this, to foreign exchange volatility. We live in a world where historically, what's developed since the post-war world is, or maybe I should go back one step. Domestically and internationally, our financial system is structured around things being called safe assets. Locally, it's like government bonds, and things which are non-safe. And that's how we run the domestic financial system and the international financial system. And for historic reasons, what is considered international safe assets are a handful of developed country currencies. European currency, US currency. It's not at all clear why that is the case today fundamentally, from a fundamental economic perspective. India has a lower debt to GDP ratio than the EU. Botswana has a lower debt to GDP ratio than Italy or Greece or many European countries, and the US too. So, but this is there for a number of historic reasons. And it means that our countries, developing countries, have much more foreign exchange volatility. When there's a crisis anywhere in the world, money flees our countries. We have to raise interest rates to defend our currency. We have to cut fiscal spending to defend our currency. We deepen the crisis. While it's in rich countries, when a crisis takes place, they can cut interest rates to protect themselves. They can spend more money to protect themselves. They can dampen the crisis. So we have this asymmetry within the international financial system. And the way we see it is in foreign exchange volatility. And that contributes, this blockage, this foreign exchange volatility represents a wall that stops the money flowing. And that's why the cost of capital is so high. We're not going to reduce the cost of capital unless we find a way of breaking down those barriers and letting flow of capital. The reason why the cost of capital is high, people talk about it in terms of risks. It's actually because developing countries, Brazil, other countries, huge opportunities and not much savings. Big demand, not much supply. Money is expensive. Cost of capital is high. We need to break that down and create a conduit. And let me end by saying that's what we've been spending a lot of time in the past 12 months working on. And you mentioned Echo Invest. We think that one of the things we've learned is that so the cost of hedging foreign exchange is 10 percentage points, 12 percentage points, 14 percentage points. That means if you find an attractive return in Brazil, but you want to hedge the currency risk back into euros and dollars, you've got to take off the top line of your return as much as 10 percentage points. That makes it very hard for that money to flow to good returns. We found that 90% of the foreign exchange risk is inflation risk over a long period of time. And so, as in Brazil and many other countries, you have inflation indexing. So if we took projects that had a natural inflation hedge, a natural inflation index, then we're not dealing with 100% risk, we're dealing with a 10% risk. And we as a multilateral development bank are quite happy to put up insurance for the 10% risk. So if we can find local projects that can hedge themselves on inflation, we will provide cheap foreign exchange insurance for the real exchange rate risk. And we could cut the cost of FX hedging by 90%. And that's what we propose to do. We've started with Echo Invest to try and develop that. We're doing that in a new project called Reinvest Plus that's creating portfolios of interesting investments held by banks in Latin America, and where we will wrap the portfolio with this FX insurance to help create the flow of capital, break down the cost of capital. Thank you.
Fantastic, fantastic. Many new things to come, and I know that you guys are working on that. Alain, thank you so much for coming. The Green Climate Fund has been very close to Brazil. Many discussions going on, many discussions with BNDES, many discussions with the Finance Ministry, and Mafalda Duarte has been many times in Brazil, and she's a strong advocate of crowding in private capital. Tell us a little bit of what's going on in the Green Climate Fund and what's to expect.
Thank you very much. Yes, indeed, Mafalda Duarte was very close to Brazil. She was in Brazil actually in July, visiting the authority and preparing the COP30. I'm very happy to sit in this panel because I have recognized many partners, entity of the GCF, IDB, of course, BNDES, of course, for the country platform we're launching. and Avinash, because we work on the British agenda together. The Green Climate Fund, as you may know, is the largest multilateral funds dedicated fully to climate finance. We're doing like 50% mitigation, 50% adaptation. As of today, like 10 years after the first project was launched, just before the Paris Agreement, we have a portfolio of 18 billion financed by the Green Climate Fund. And we co-mobilize on top of that about 50 billion. It's about 300 projects in more than 130 countries. What is very interesting in the model of the Green Climate Fund is that actually we have a very full mix or full range of instruments that we deploy on the ground. Of course, grants, 40%, 45% grants, 40% concessional loans, so high concessionality, but we also deploy equity on the ground, 12%. 12% equity is actually very high. Even if you look at the MDBs, something like the EBRD or the AFC, 12% is usually the top range of what they are doing. And out of the 12% of equity that we're doing, one third is going to the least developed countries. So we really take the risk where nobody else is taking the risk. Same thing on the private sector. Private sector is 36% of our portfolio, which is quite high for the climate funds. And if you look over the last 3 years, in the private sector, we deliver more than 40% of the private sector in adaptation. Think about that. 10 years ago, nobody in the private sector was going in adaptation. So we are bringing the private sector in places where basically they were not going alone. So the key message here, and I think this is important, and you're perfectly right, Avinash, there is an issue on how you attract the money to the right place. And so where the GCF is quite unique, because as of today, if you look on the market, we don't have many pot of concessional money available of this size. Yeah? We're probably one of the last few ones still available to de-risk our partners, BNDES, IDB, MDBs, but also local partners. Yeah? Just give you an example of a project that was quite successful. We launched about 2 years ago, the project Gaia. Gaia, the Green Climate Fund put on the table 150 million equity. Big ticket, big risk. With that, we created a platform of 1.5 billion. This is a leverage effect of 10. And it's now deployed in 19 countries. And what is very interesting in Gaia is 70% of the funding are going to adaptation, private sector driven, with partners like MUFG, the Japanese bank, or FinDev Canada. We were actually in Canada yesterday and the day before. And the last point, which is very interesting in this model, is 25% of the funding are going to the most vulnerable countries, like the seeds and the LDC. And I think this is the beauty of this instrument that we are deploying, is that basically we are able to bring the money where it's the most needed in adaptation, in the most vulnerable countries, where basically nobody will go without kind of a first loss cover that we are providing to them. Thank you.
Thank you very much. Patty, we have been working a lot together in this year through the Sustainable Business COP, and we have discussed so much about finance. And you have a very interesting perspective because you can see the global view of what's going on. So what's your take? How is the money flowing? Is it flowing to emerging economies or not? What's your view?
Well, thank you, Luciana, again, and congratulations for the Brazil Climate Summit for another edition in a moment that's so critical for us and being so resilient in keeping us working on bringing the money to where it should be flowing. I think Avinash, Luciana, and Alain gave a good perspective on that. I will just complement some of the numbers that Avinash gave. There is $40 trillion per year flowing in general. The need that we have for climate finance and nature, it's between 6.5 and 8 trillion. We had an increase, a significant increase in 23 and 24. We are still very far from these numbers. So in 23, the official number is around 1.5 trillion. In 24, we might reach 2 trillion. We don't have the official figures closed yet, but chances are that we'll be in the 2 trillion, so pretty close to what we had in 23. And similar to what Avinash said on the total numbers, we had a smaller increase of flow to the emerging markets, but it's only 10% of the climate finance that's going to those regions, and to Latin America is 4%. So we are saying that we never reach more than 300 billion coming to the emerging markets in this area, which is quite a problem. And when we started SBCOP, the idea was to listen to the private sector and understand why this money is not going towards this direction. In Brazil, there was also important initiative started 3 years ago with the Ecological Transformation Plan, when the government, especially led by Minister of Finance and Minister of Industry and Commerce, started showing to the world the directions that the country was going towards too. Because different from the global north, we have an advantage in the global south that investing in climate. Avinash published a very good paper that I recommend you to read that talks about climate finance in a very simple way, explaining that you can have the climate finance that's on the cost side, the climate finance that is for savings, but there is the climate finance that is actually for revenues and returns. And in our case, in the so-called global south, and especially in the case of Brazil, we consolidate most of the opportunities where high returns and high revenues can be achieved. But for that to happen, what we heard from the private sector is exactly that we need to work on de-risking. And in de-risking, it's twofold. There is the piece on the debt side that we talked a lot here about, having some type of catalytic capital to reduce the exposure to FX risk and also the exposure to first loss. And I think Luciana mentioned one of the major advancements that we had in this partnership between the Brazilian Treasury and the IDB was the launch of EcoInvest, because EcoInvest was a response to these needs. The first bid already raised $8 billion with a leverage of 6.5. The second bid leveraged 5.5 billion, but it's important to say what's underneath that. Maybe it's my main way to complement what was said. We started working to show where the opportunities are. So we need to add the value chain lens. The example that Alain gave, you invest when you know where the investment is, when you know the sector, when you know the levels of returns in that sector. So this layer where the country showed that in the ecological transformation plan, you can double the GDP growth. The 6-5 axes are energy transition. Inside of energy transition, in the case of Brazil, bioenergy is very important. Inside of bioenergy, BioSAF alone can add between $30 and $60 billion to the economy per year. And then you start showing the 6 to 7 technological routes. Then you get to where the investment should happen. And we need to be very specific. So the challenge on that is because we are talking about, I would say, not only what Avinash said, the biggest shift in where the money should be flowing in terms of moving from traditional investment to climate and nature, but also is the biggest scale of investments in greenfield. And then we need to structure value chains from scratch. So it's not only the FX risk and the first loss risk, but it's the risk of the value chain itself. And this is very different because we need to invest in skills, we need to invest in people. So understanding, we need to be experts now in specific sectors. And in a way, it's a challenge, but I would say it's the major opportunity that we have, in our generations. For those of you here who are in the market, specialize in those areas, bioenergy, in critical minerals, in bioeconomy, there is no turning back on that. Even if we see, yes, some countries are still taking some decisions that are hard to understand, investing in the brown economy that have a short life. But at the same time, these other areas are here to stay, and that's what makes me more optimistic about that.
A lot of capacity building, right? We need to definitely to work on that. Lu, a lot has been achieved, but we are not there yet, right? And you have the privilege of implementing several different tools in the market and being able to analyze what worked, what didn't work, what the market needed, what it still needs. What were the lessons learned? And in your view, what are the roadblocks that still persist for us to scale up?
Like Avinash said, our huge challenge in Brazil is our high interest rate. So this is, despite the high interest rates, investments are still growing in infrastructure and energy transition in Brazil. But I mean, at a certain stage, we need, what we have done because investments in energy transition and infrastructure are long-term investments, and long-term decision. So with those instruments like mini-perm, and we will we now allow the clients of BNDES to re-leverage the project down the road. If there is a decrease in the interest rate, we will pass through the benefit to the sponsor. So those are instruments that we have created to mitigate the high interest rate of Brazil, but it's not enough. So, I mean, the country is still working to be able to reduce interest rates because, like Avinash said, demand is there in energy and infrastructure. We do not create demand. Either demand is there or demand is not there. In the case of Brazil, demand is there because we are the largest net exporter of food. We have huge potential in mining, and we have the whole infrastructure to build. So there is demand for infrastructure, there is demand for energy. We just need to unlock investment, and a bottleneck is our high interest rate. The other thing that it's important at this stage, we have, because I understand that energy transition is a path of no return, but there has been a lot of discussion if after the Trump administration, what happened in Europe with the very strong regulation and lessons learned, I mean, because if we impose very restricted regulation, it's also a setback, because then the reality will impose. So in my opinion, we have to focus on projects that are economically viable. For those that are still not economically viable, we have to scale up to make them economically viable. We have to mobilize concessional funding, and BNDES, and with the platform and with the ecological transformation plan, we will be able to do that. And I mean, and down the road, the country is doing its lesson to try to have, I mean, a lower interest rate.
Fundamental. That's certainly enough. It's a
even FX volatility, which is
it's linked with that.
It's linked to that.
Completely agree. Avi, same question here. What's still the roadblocks? And we talked a lot about the facts, and EcoInvest is a tool certainly for that. But we also have discussed how we solve that for equity, right? That's a question that we need to solve. Otherwise, it's gonna we are solving just part of the equation. So, what are the roadblocks still? What are you wondering about these days?
I studied economics in a very Anglo-Saxon tradition, which was that if something makes money, people will invest in it, which sounds very simple. And it makes people conclude that if people are not investing, it's because it doesn't make money. There's something wrong with it. And those of us who've lived in developing countries understand there's an awful lot of stuff that's good and can make money for which we're not getting investors. And there's an awful lot of stuff in other countries which seem to be bizarre and not very good getting money. So I've learned in practice of finance, not what I learned studying finance, is that finance is very structural. You need a structural explanation. These deep wells of capital that people talk about, they're pension funds and insurance money. It's not hedge funds. It's not special operations funds. It's pension funds, insurance companies, and they've got investment committees, and their investment committees try to protect themselves from when things go wrong, basically have rules. And these rules are reinforced by regulators. So basically, this pension fund and insurance money can only invest in investment-grade rated securities in their currency. So take a European pension fund, and in BBB rated euro investment. And what are we producing in emerging markets that we're trying to bring them to? New exciting projects, not permitted yet, not constructed, definitely not rated, and in local currency. So there's a blockage. It's a structural blockage. And we came upon this idea that we're actually going to be launching on Tuesday with your help and President Dulago, which saying, okay, but you know what? They are investments. As you have been doing all this work for quite some time, in emerging markets, there's over $3 trillion of performing loans on balance sheets that are 3 or 4 years old. They're performing. They've been paying the interest every year. In Latin America, we've done the work, and it shows it is $500 billion in Latin America on commercial bank balance sheets of performing loans. Half of it in local currency, half in foreign currency. 80% of local currency is in Brazil, but $500 billion, $500 billion. So what we propose to do is we're going to buy, if we tried to buy the unpermitted, unconstructed startup, the amount of credit enhancement we'd have to do, the amount of first loss guarantees would be so big that we could never scale that up. But what about going to where the investments already are and already performing? So we're going to buy into that $500 billion of performing assets. Possibly not BNDES's portfolio, because you're not a high-yielding lender. You lend well. We need high-yielding portfolios of performing assets. We're going to buy these, and we're going to diversify them across Latin America and the Caribbean. We're going to put them into a portfolio, and we're going to provide portfolio insurance at a portfolio level, which is much cheaper than at an individual loan level, on political risk and foreign exchange risk. And now we will have BBB rated securities in foreign currency. And we will sell that to institutional investors in Europe, United States, and elsewhere. And with that flow of money, we'll go and do it again, and again, and again. This is a loop, a capital recycling loop that can get up to $1 trillion a year globally. But where's the additive bit? When we are buying these loan portfolios, these existing performing loans, in all kinds of things, half of it is not in fossil fuels, so we'd be focused on that half. We then say to the sellers, we're going to buy your loan portfolio. We're going to buy it at a good price, at a price that makes you want to sell it to us, on condition that you reinvest your loans in sectors aligned to the National Development Plan. And that's how we'll get the people on the ground who know how to operate local businesses, who understand the local conditions, understand the local regulation. They've done it once. We say, here's some money, do it again. And that money we get from taking their performing portfolio and selling it to the institutional investors. We think that, we call that Reinvest Plus. We think, and you've helped us develop this idea, we believe it's the idea out there that can actually scale up to $1 trillion, principally because it doesn't require any public subsidy. Public subsidies are important for catalytic, demonstrative things, but you cannot scale up public subsidies to $1 trillion a year.
Very good. Very excited about this new initiative. Alain, I'm going to join two questions here together because we are running out of time. You can comment on Avi's, yeah. So go ahead, comment on Avi's comment. And from the Green Climate Fund perspective, what were the lessons learned, and what do you want to focus in Brazil so that we can scale up Brazil's potentiality?
Thank you very much. Just a very short comment on the discussion. I really love it, Avinash. We had that several times. We talk a lot about like the climate and the climate finance, and basically how can mobilize the finance. But there is also a bottleneck in terms of capacity, and you know that capacity on the ground. And we have sometimes in many countries that the GCF is entering, we have the money to implement project, but we don't have the capacity at the local level to be able to implement it and to monitor it. So we have at the GCF an envelope, which we call the Readiness Program, 500 million, just for capacity building, because we believe this is one of the key bottlenecks. Now coming back to your question. As of today in Brazil, the GCF is doing about 500 million investment deployed in 15 projects, and we have 40% of that in the private sector. And after a discussion that Mafalda had actually with the Brazilian authority in July, we identified a further portfolio, which is quite big, at least the double of that. There are many, many good projects that we can focus on, but there is one initiative we are very proud of, and actually it's with BNDES, is the launch of the platform last year. This was at the World Bank annual meeting. And why we're proud of that? Because this platform is kind of a new generation of platform. You know, many of you have been involved in following the JETP, Just Energy Transition platform. You may remember that, COP26, South Africa, and then there were a series of them, Indonesia, India, Vietnam, and Senegal. And I was part in the negotiation team for Senegal, by the way. It was a first generation, very interesting platforms, but very much driven by the IPG group, the G7, very influential. And some money coming in. South Africa was 8.5 billion, so significant. But the country ownership was not necessarily always in the core of the platform. So this was kind of the weaknesses that was identified. What we really like in this new generation of platform that was launched in Brazil last year is that country ownership is put back in the core. I mean, who is running the platform? Who is having the secretariat? BNDES. These are people who knows the local environment, who knows the priority, who knows the NDC ambition of Brazil, which is quite high after the renewed ambition. So we like this new kind of platform. The GCF is here just to finance the secretariat. So we put 1 million readiness program to support you. You decide about the priority. You have 3 priorities: energy, industrial decarbonization, nature-based solution. You decide about project pipeline. You decide about the partner you want to work with. Could be the World Bank, could be the IDB, could be also local development players. So we want to put the country ownership in the core of this discussion. And the interesting thing is, after the launch of this platform, we had 30 countries coming to us saying, we want the same model. So we are now like preparing an announcement for the COP30. I mean, we have 10 platforms more or less ready. Actually, if you look at what happened over the last few months, already Prime Minister Motley announced a platform in the Caribbean with 7 countries in June at the Ocean Summit and then the Caribbean Summit. And then 3 new platforms, actually 4 new platforms have been announced over the last 2 weeks. One in Oman, with like GCF money 1.5 million. One in Panama, one in Dominican Republic, and one in Colombia. Thank you. And we're expecting further platform now in Africa, in the Asia Pacific in the coming few weeks. So this model of the new platform with the country ownership of the core, we believe is basically the future and can be deployed at scale in emerging and developing countries. And again, what is very important is we are ready to deploy that in any kind of country. It could be like big emerging country like Brazil, but could be also like very vulnerable countries or seeds, like in the Caribbean. There is appetite, and we're able to tailor that to the needs of the country.
Fantastic. Pachi, what are, in your view, the big opportunities that we have in front of us? What are the lessons learned that we can apply? Are you optimistic?
Yeah, all of us are optimistic, right? Otherwise, would not be here today. But maybe complement a little bit what we heard. First, on the roadblocks, I think we talked a lot about capital, de-risking capital. But Avinash mentioned a point about the nature of the opportunities in our region. It's everything's very new, so makes investors very insecure. And it's new because we are talking about things that are, for the first time, we are discussing to add value to our value chains. So we are talking about levels of TRL, technology readiness, between 6 and 9. We are talking about applied research in a way that we are trying to move the needle, not only in exporting green commodities, we are talking about exporting high value-added, technology-embedded products and services. So this adds a new layer of risk to these opportunities. I love the idea of Reinvest Plus. We've been working together on that, and it's going to be important because in terms of numbers, we mentioned it's $200 billion going to emerging economies, and getting to $1 trillion or 2 would be really incredible. Remembering that today, those $200 billion, 80% comes from public sector. So to your point, Avinash, so there is really a lot to do to change and bring private sector to that. For these opportunities to become a reality, I would like to also to highlight what BNDES is doing with the BIP, the Business Investment Platform, because you have there 16 projects in the pipeline that teach people, as you said, Alain, where the sectors that are more promising are, in a very high level of detail. I haven't convinced Avinash, though, yet to invest in value chains like cocoa, like Macauba, because, you know, from an international investor perspective, it's a whole new world opening up, because we are talking about land use, we are talking about people, we are talking about, having millions of people producing things that they didn't produce anymore. Then the last point is I'm optimistic, but we need to look into three things: technology, trades, and people. So we need to invest in our people. In the last estimate that we did, we published the report last week, we can create 28 million opportunities of jobs and income generation for people in Brazil with all these value chains. But for that to happen, we need start, as of now, to reskill, skill, upskill all these 28 million people. We need then to decide where those value chains will be, which state, which city, and how we can work to invest in the people who will make these investments less risky to those investors in the world.
Fantastic, Patty. Last question, and I just want one sentence because otherwise they're going to kill me because of time. But when we created the Brazil Climate Summit, the whole idea of Brazil Climate Summit was to showcase Brazil. That's why we are in New York. Let's bring the opportunities here, and let's showcase what Brazil has to offer as a hub of solutions to the world, a hub of opportunities. Now, the world is coming to Brazil. We are going to have COP in 60 days, less. I want one advice, not related to logistics, please, okay? I want one advice for the country. The global environment is coming to Brazil to discuss opportunities in climate. What is the one advice that we have for the country to prepare for that? One sentence. I will start with you, Patty, because that's non-script question.
My advice is...
Non-logistical.
No, I will not talk about logistics. But my advice is for us, as a Brazilian here, to be brave and be ready to lead the transformation that the world needs now. So we need to learn how to lead instead of being led.
In my opinion, the country needs to show what is investable now, what is short-term, short, medium, and long-term strategy. We need to showcase that there are investable projects in Brazil, even on the climate side. Some projects are for midterm, but they will happen, and the other ones more long-term. But I think that we need to be pragmatic in the dialogue with international investors during COP.
Lots of sizable investments, by the way, right? Avi, what's your recommendation?
I've been lucky to work with finance ministries and central bankers all over the world. Nowhere is there a better understanding of foreign exchange risk than in Brazil today. This is the place for us to find a solution that is global.
I like this.
Thank you very much. I will move away from the climate finance space. I mean, we have a very complicated world at the moment, as you know. What I expect from Brazil is political leadership. Being the compass and show the way forward to all of us. Thank you.
Fantastic. Thank you so much.